Greetings, members, one and all of the Salivation Nation. Gold price stalls, silver holds on. Is this a buying opportunity? Let's explore. That's the headline for today. We can see here by the market movements, and we kind of notice a little pattern of this when we did our market watch, and that pattern is held through to today as we see gold drop more than silver. In fact, silver was actually up slightly when we did the market watch in Asia, but then both metals fell slightly. And as we have gone in throughout the last 18 hours or so, well, we are looking at here the prices. Now gold is down dramatically more than silver, almost double in percentage values here, more than silver. And so that leaves people wondering what's going on here. Typically, when gold drops, silver drops more. Silver's a volatile metal, but it's actually holding fairly steady. Platinum is up, and palladium is down, and rhodium is up over 5%, the winner of all the metals today. Very interesting indeed here. It leads us to an article here from Kitco. Gold is running out of gas, but analysts see correction as a buying opportunity. And it makes you wonder if my prediction of $2,000 gold for this year will happen, as we're getting close to halfway through the year, and we've not gotten to that point yet. Hedge funds are starting to take some profits in their bullish gold bets as the price struggles around $1,900 an ounce, according to the latest data from the Commodities Futures Trading Commission. While many analysts remain bullish on gold through at least the end of the year, many have said that consolidation below $1,900 would be healthy after 2 solid months of gains. In a recent interview with Kitco News, Ole Hansen, head of commodity strategy at Saxo Bank, said that the technical outlook is bearish. However, he would not be playing the short side. He added that it is difficult to be bearish on gold when inflation pressures continue to rise. And I agree with that. And so, it is interesting to see, and we have to remember, many of us get frustrated about silver not performing like gold has. But gold stackers should be very happy that we are really flirting with the all-time highs still. I think anything above $1,800 is pretty good for gold. In fact, some may say that gold is overvalued at these prices. And so maybe this is a correction. We shall see. I actually disagree with that. I think that gold is probably fairly near to where it is. Maybe $2,000 gold would be overvalued, just as it was last summer. But nonetheless, I believe that there is a stability with gold, that even though we've seen it perform relatively erratically as of late, I believe it's kind of near the normal territory. But nonetheless, we are seeing that gold to silver ratio narrow some. And I think that is promising. And it gives us some insight as to where it should be. The CFTC disaggregated commitments of traders report for the week ending June the 8th showed money managers decreased their speculative gross long positions in COMEX gold futures by 2,233 contracts to 145,037. At the same time, short positions rose by only 76 contracts to 37,373. This is the first time in 6 weeks that gold saw its net length drop. Gold's net length currently stands at 107,664 contracts, down 2% from the previous week. And I think that is telling. In fact, again, how these reports, especially the Commitment of Traders report, I believe that report is the fulcrum and the foundation for a lot of the theories out there about price suppression. And this may be one of those things that people may interpret that price suppression because of what we can't read from these reports because of, I guess, privacy issues or what have you. But nonetheless, what has happened? These are reports from 7 or 8 of the biggest banks, and so it could be interpreted as that. Just kind of throwing that out there. So this is where we're seeing during the survey period, gold prices managed to test resistance at $1,900, but were unable to hold any gains. We see evidence that money manager positioning was overwhelmingly driven by algorithmic trend followers over the last month. However, with algorithmic short covering now running out of steam, we see evidence that prices are increasingly vulnerable to near-term pullback, like a speed bump on a racetrack, as inflation hedging demand wanes alongside physical flows, said analyst at TD Securities. Of course, look at that as a speed bump, which means it's only temporary, unlike the dead cat bounce where you see a rise from this dead animal after being bouncing only to fall even further and down the road. Many analysts have said that they see a correction in gold as a buying opportunity, as the Federal Reserve is not in any hurry to tighten its monetary policy, even as inflation pressures rise. In fact, what was it? 4.2% for April inflation rate. May's inflation rate was 5%. And that should tell you something. I think this is why I am standing by my predictions for gold. It may not stay there, but I believe it will touch $2,000 again before the end of the year. And again, I could be wrong. We shall see. And I also feel that silver will hit $30 an ounce and mainly follow gold in that regard. Gold is losing momentum. Interest in silver is picking up as hedge funds reduced their bearish bets last week. And that is part of the reason why we're finding out now why silver is not dropping as much. The disaggregated report showed money-managed speculative gross long positions in COMEX silver futures fell by 1,970 contracts to 68,150. At the same time, short positions dropped by 3,675 contracts to 25,766. So there you go. Silver's net long length now stands at 42,384 contracts. A contract is 5,000 ounces of silver, which is up 4% from the previous week. This was the first increase in silver's net length in 4 weeks. So, and again, from the same report, the Commitment of Traders report, of course, those who believe in price suppression will probably ignore these findings. During the survey period, prices managed to hold critical support around $28 an ounce. $28 an ounce is a psychological level, and we've seen silver right around that area for a little bit now, so it's kind of encouraging. Copper is holding critical support around $4.50 a pound, even as hedge funds continue to reduce their long positions and increase their bearish bets. So that's interesting to see. The disaggregated report showed money-managed speculative gross long positions in COMEX high-grade copper futures fell by 1,447 contracts to 66,095. At the same time, short positions rose by 1,643 contracts to 42,417. I think it's time for a copper squeeze from the COMEX. What do you think? Copper's net length currently stands at 23,678 contracts, down 11.5% from the previous week. I don't know how much copper is in a contract. I wonder if it's still the 5,000 ounces. Well, I don't know. If anybody knows, post it in the comment section below. While the bearish factors continue to weigh on price action, supply concerns surrounding the Peruvian election have seen our readings of supply risk premium over support for the market to end the week, said commodity analyst at TD Securities. Peru is one of the largest producers of silver, and they also produce gold. So they're looking back again. Here are the prices as the market will be closing very soon. As of the recording of this video, we can see silver is down 32%, 0.32% here, just almost a third of a percentage point. And gold is up 2/3 of a percentage point, or down 2/3 of a percentage point here. at 1866.40. But you think about it, that's still a very high price for gold in my view. It wasn't that long ago, it was in the 1700s. And so gold is down, but certainly not out. And silver is hanging on. It's below 28 now, but I believe it's an easy path to $28 again. But what I really like to look at here is the gold to silver ratio. It is now narrowed to just above 67. Remember, we saw 66 and 65 earlier, and we very well could see that again, and I think that would be exciting to see. To me, that is much closer to the normal, what it really should be. I believe that the gold to silver ratio is somewhat out of whack, as many people believe as well, and so we shall see. So there it is. There's the news of the day for the markets and for where things are. Now, to answer the question, I know the analysts believe that, is this a buying opportunity? Anytime there's a dip like this, yes, it very well could be. But you must keep in mind that just because we saw this dip, $12.40 today, does not mean that it won't go up again tomorrow. Although I am bullish, just as I had said in a previous video, it's one of those cases where I actually called something right and it rose up the next day. Well, now they're back down slightly, and we very well could see this continue to go down a little bit. But I believe that overall I'm bullish for gold, and we will start to see the low 1900s again soon. But as is always the case, don't ever take my word for anything. Do your own due diligence and research. These are just my feelings on the matter, as I'm not a financial advisor. But nonetheless, there they are, the gold, silver prices, and the news of the day for precious metals. I hope you found this video insightful, and if you did, I would encourage you to engage by commenting below, hitting the thumbs up button, hitting the notification bell. And so I say all that to, again, extend that multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.